Hello, I welcome you to this learning session on the IFRS for the SMEs, session 5. In this session, we will be discussing about section 6 of the IFRS for SMEs dealing with statement of changes in equity. Let's go. After completing this session, you will have an understanding about the following points. The first point, the items to be included in the statement of changes in equity and SIRE requirements and presentation. So SIRE stands for Statement of Income and Statement of Income and Retained Earnings. Statement of income and retained earnings. So we will discuss the conditions in which we can prepare SIRE and the contents of the SIRE. So let me tell you one more thing. SIRE preparation is just an option for the entity. So it's an option for the entity. Either they can choose to prepare statement of changes in equity, or they can prepare statement of comprehensive income plus the statement of changes in equities compilation, which comes to be statement of income and retained earnings. So it's mere an extension of the statement of changes in equity plus the statement of comprehensive income. Now let's discuss about the first learning objective, the items to be included in the statement of changes in equity. The following are the items that are required to be presented in the statement of changes in equity. The total comprehensive income during the period, and which we need to bifurcate between the amount which is attributable to the parent and to the non-controlling interest. What we basically do is, like, when we prepare statement of changes in equity, we prepare two columns like this: the amounts attributable to the parent holdings and to the non-controlling interest, and we add just line item paid capital, additional paid in capital. We just add the line item. So these adjustments we make at the header of the statement of changes in equity. The effect of any kind of restatement that have an effect on the changes in accounting policies, because it has impact, and any changes in the prior period has an impact on the retained earnings, the opening retained earning balance, because all the catch-up adjustments are form part of this. So when we discuss the statement changes in equity, we'll talk about the catch-up adjustments. It's very simple to understand. So these are basically the items because of which there are changes in the equity balances, and statement of changes in equity is nothing but a reconciliation of the changes in the statement about the changes in the equity balances as compared to the prior period. So under the requirement of the standard, we need to prepare a reconciliation of the following items, and has to be presented in this particular manner. The first is the profit or loss, the other comprehensive income. So always remember, these are the items that may cause changes in the equity balances. That's why we are preparing a reconciliation statement. So we need to prepare and bifurcate between the profit or loss and the total comprehensive income rather than the total comprehensive income. So we need to bifurcate between profit or loss and other comprehensive income. Any transaction between the owners as capacity as owners, which primarily involves payments of the dividend, any issuance of the share, any treasury shares, which means any kind of a buyback, basically we are talking about any dividend distributions, and the changes in ownership, which means any dilution in the non-controlling interests, so which do not have any material changes in the control. So these are the items we need to present in the statement of changes in equity. Now let's understand the requirements relating to the statement of income and retained earnings. Statement of retained earnings can only be prepared when there is no complex change in the equity balances. So let's understand, it can only be prepared when there is no complex change. No complex change in the equity balance, which means there should not be any OCI items. No OCI items. Then in such a case, the entity would be able to prepare statement of income and retained earnings. Basically, it's just an extension of the income statement, and there should not be any OCI items. So the standard says a statement of income and retained earnings may be presented in place of statement of comprehensive income and statement of changes in equity if the only change in the equity comprises profit or loss, payment of dividend, and correction. These are, we call it as non-complex changes. In addition to this information required under section 5 on the statement, which means we just need to prepare income statement and we need to drag them up and prepare all the reconciliations. It is just a reconciliation. What we need to do is, like, when we have the income statement profit, we just need to add the opening retained earnings, any dividend paid, for example, or any kind of adjustment mentioned here, any adjustment mentioned here, and we need to arrive at the closing balance. So this has to be prepared in one single statement. That is what we call it SIRE. So I think it's very easy to understand. SIRE is just an extension of the income statement, and it's an option for the entity to prepare instead of preparing statement of changes in equity. I hope you guys like this video, and if you have any queries, just put in the comment section, and I'll see you in the next section. Thank you.